Have you noticed your insurance rates have been skyrocketing, or maybe you got dropped from your insurance company? This is happening all over the state of California. It's another crisis, insurance crisis, and there are some striking parallels between what's happening in this insurance crisis and what I'm seeing as a property manager of over 1,300 units in Southern California. I'm going to break down what I'm seeing, and I'm also going to give you 3 tips that our clients are using to secure better insurance faster, save time, save money. So make sure to stay to the end of this video. Promise big value, no fluff. Let's get started. But before we do, please hit that like button if you would get value from this video. Help me grow this channel. It would be appreciated. Let's roll. So March of 2024, State Farm, the largest insurer in California, said that they would not renew 72,000 policies. This is 30,000 homeowner, rental owner policies and about 42,000 commercial apartment policies. All right, this is affecting a lot of people. And State Farm is not alone. There's been Allstate, Farmers, even USAA, which has a sterling reputation. A lot of these companies are getting a bad rep. We'll talk about that, like, oh, they're being greedy. However, they're coming out and saying, we're not going to be able to write in this state anymore. We're not going to be renewing these policies. And they're stating a number of reasons. So these companies credit a historic increase in construction costs, outpacing inflation, yes, rapidly growing catastrophe exposure, sure, and then a challenging reinsurance market as a reasoning behind limiting coverage. Okay, but what seems odd to me is they're leaving out something very important. What are they not saying? They're not saying this. They're not saying that the reason all of those are just symptoms. The reason they're actually leaving is they can't charge enough to remain profitable. And why can't they charge enough to remain profitable? Because of the regulations that California has. They're so burdensome. There's so many hoops to jump through. There's price controls. We're going to get into that. That's right. Outdated state regulations basically limit these insurance companies' abilities to charge what they need to charge to stay in business and be profitable. And yes, this insurance crisis is multifaceted, but I love Pareto's principle. What are the 20% of issues that are causing 80% of the problems? 20%, yes, wildfires, but also the regulations, and I'm going to show you why. So during my research, I found out about a little known proposition, Prop 103, that was passed in 1988, that I think is having a big impact on this insurance crisis and what we can learn as housing providers about this. So Prop 103, passed in 1988, basically wanted to protect consumers from unjust rate hikes. First off, does that sound familiar? Rent control, like protect tenants from landlords, so we're going to add more regulation. Sure. Okay. So key provisions, it did a bunch of things, but basically it required approval from the insurance commissioner for insurance rate changes. It mandated they roll back 20% of rates for auto, homeowner, and property casualty insurance, that they give a good driver discount of 20%. I always thought that was just like a cool thing one of the companies came up with, like, you're a good driver with Allstate, 20%. No, like they actually mandated that into law with this proposition. This is the big one. It had a wildfire modeling exclusion, which basically said insurance companies, they're very smart, they're data driven, they know, they use these sophisticated models and algorithms. And so they can forecast what fire danger is going to be like pretty accurately the next year. However, under this law, they weren't able to do that. They were only able to use past historical trends when setting their prices. And they're like, hey, like, but that doesn't make sense. We know like it's going to get worse next year due to climate change and due to the forestry management and all the stuff that they're looking at. All that being said, why was Prop 103 such a big deal? Because it was a big shift away from a market-driven approach to insurance to a more government-controlled approach. And we're seeing that big shift happen over the last 6 years with rental property, with AB 1482, SB 67, these different rent control laws, and all of these government controls they're putting in now, I see striking parallels. And I don't want to see the same thing happen to our rental industry that's happening in this insurance industry. All right, so you might say, Steve, well, this was 1988. Why? It's only a problem now. That can't be a big corollary. Well, I say, okay, well, what else has happened in the insurance market since then? Obviously, government's probably done other stuff. So number one, they had a non-renewal moratoria they passed in 2022. Where basically it prevented insurers from adjusting their risk exposure based on new and evolving data. And this led to increased financial pressure on the insurance market. Number two, COVID rate freeze. They weren't allowed from 2020 to 2022 when construction costs were going through the roof and prices were just going crazy due to inflation. So the COVID-19 pandemic rate freeze with insurance imposed a rate freeze on auto insurance and mandated premium refunds. May 20 to 2022 of October, it did not approve any rate filings despite rising costs in vehicle repairs and other expenses. This created a significant financial strain on insurance companies, obviously. And then lastly, the California Supreme Court also had affirmed the broad regulatory authority of the insurance commissioner, basically gave the insurance commissioner more power to promulgate extensive rules and regulations. This led to more intervention in the insurance market and created additional administrative and financial burdens for insurers. So can you see how this has a major effect on businesses? It restricts businesses' abilities to raise prices as needed, adjust to market conditions. And this overregulation, basically, Allstate in 1 year in 2023 lost $1 billion. Their credit rating was downgraded from an A to a B. Like if you're a CEO of one of these companies, you're employing thousands of people. It's your job. Yeah, you might say these greedy corporations, right? Well, it's like, hey, they're in business to make a profit. And it's not greed to me to be like, hey, I actually can't lose $1 billion a year. I actually can't, go out of business. I can't get downgraded on my credit rating. So I am going to go to another state and not right here anymore. You know what I mean? All right, so overregulation, the biggest problem with this crisis, in my opinion. There are other important issues that are leading to this crisis. So, like number one, climate change, they're saying leading to more severe fires. The number of fires actually has not went up, but the severity of these fires have gotten so much worse. Some people say it's because there's drought and there's just so much brush. Some people say it's bad forestry management. Then we have rising construction costs that have went up 40% approximately since 2019 till today. When someone gets a flood in their property and files a claim, all of those costs to fix that property have went up so much. And because they're losing so much money and there's been all these catastrophes like fires and floods in California, the reinsurance market, which is the insurance company for insurance companies, so they get what's called reinsurance, where they have an insurance policy that if there's a big catastrophe, like a big fire, that they can go to their insurance and file a claim. And so these rates for reinsurance has just went through the roof, and they're not able to raise rates fast enough because of the rules. Sound familiar again with like rent control or insurance having to go through this commissioner to get approvals that they just have to leave the state and not renew. All right, so California Insurance Commissioner Ricardo Lara is making some moves trying to fix this. So they're trying to streamline rate reviews. They're allowing them to do catastrophe modeling now, which is awesome. And one of the things this catastrophe modeling will also allow is for insurance companies to take into account when people do fire mitigation, when they take proper steps to mitigate their property from fire and brush, when there is maybe more firefighters available nearby. These are all things they can take into account. And by the end of the year, Laura is also planning on changing it to where that they can factor in reinsurance rates into future pricing. Okay, cool. So they're going to pass a law that allows businesses to consider their expenses when setting their prices. So that's a good, win for democracy. So I've heard some people say, well, what about Florida? Florida allows catastrophe modeling. Florida doesn't have the regulations as much on price controls and whatnot, and they're in a worse insurance crisis than we are. One of the things in Florida that have led to their insurance crisis is something called an assignment of benefits clause, which basically allows when you have a claim for the homeowner to assign the claim to the contractor. And this has led to all sorts of fraud. It's led to tons of litigation. In fact, Florida accounts for 80% of homeowner insurance lawsuits in US, although it only represents 9% of claims. So there's three big lessons that I take away as a housing provider. Number one is overregulation and increased price controls hurts markets, hurts supply of available services and goods, and ultimately makes the market more unhealthy for everyone. Number two is business pricing autonomy is important. Businesses need the flexibility to charge more when their expenses go up, but ultimately the market's going to dictate what that means, if consumers buy that or not. We need more market-driven approaches. We need to support market-driven candidates. And I think with this day and age of AI and all this stuff and internet connectivity and instant communication, that we don't need as many regulations as we did in the past, because if a business is not treating people well, boom, 50 other businesses come in with a better value, a better service offering, and people gobble that up. And so more market-driven approaches moving forward. All right, Steve, it's a mess. I get it. But hey, I got this insurance policy that's canceling. What do I do? Let me give you some tips that our owners are using to help navigate this crisis. So first is plan ahead. So before anyone even turns their home into a rental or buys a rental property, make sure you get a quote from an insurance company or a broker, because it might be 2x, 3x what you're kind of penciling into your cash flow, and that could, sink you. So I switched over to a company called Pacific Premier Insurance. I don't get anything for plugging them, but they're just a great example of, they keep all of my business policies and personal policies under one roof. They're experts. They can shop all the different insurance companies. There's lots of brokers out there. I like brokers because it helps you save time. They know the market. They can keep everything in one place. They can notify you before policies expire, and it can save you time and money. And then number three, explore online options like OB Insurance and Steadily. We don't have experience with Steadily, but a lot of our clients have signed up with OB, and we don't get anything from OB for this. But there's these online insurance markets in different places. These are just two examples that have a really streamlined quote process. So I recommend you check them out. I can't vouch for them when a claim is filed because they're kind of new, but the price seems to be right and the process seems to be right. So to sum it up, if we don't want issues like this in the future, number one, I'm voting for politicians that have market-based solutions, less government regulation. And number two, I'm voting no on ballot measures like the Justice for Renters Act, which is going to increase government regulation through the ballot process. So how has this insurance crisis affected you? Let us know some of your experiences in the comments below. We want to learn from each other and help support each other. We'll see you on the next one.